Welcome to the short executive knowledge lecture on topic 1, paper 8 of the SFC licensing exams. This topic covers overview of securities investments, and we'll be looking at the major areas, the history, and some of the key factors affecting the securities markets. Now, I will emphasize the important points to help you understand the core material you need to know to sit the exam. And a copy of the study notes that you can see in front of you can be downloaded from the Executive Knowledge website under Paper 8 Resources. Now, I strongly recommend that you supplement this learning with question practice. Now, it's question practice that allows you to build up your short-term memory for the exam. And we have questions available on the platform Examinator.online under paper 8. So if you go to Examinator.online, you will find well over 250 practice questions. Okay, what have we got? The overview of topic 1. We're going to be looking at the historical background of equity, debt, and derivatives markets, and that is in Hong Kong. We'll be considering the stock exchange of Hong Kong, and then the global securities markets, specifically US, European, and Asian markets. Now, what are the key factors that affect securities markets? Well, a major one that we'll be dwelling upon are interest rates, and then we'll look at the other 5. And we'll finish topic 1 by considering the different market indices that exist around the world. Okay, looking at historical background with regard to Hong Kong. Well, there were 4 stock exchanges at a point in time, and they were all consolidated into one in 1980. Now, in 1987, you may be aware of the market crash worldwide, known as Black Monday. And Hong Kong brought in Ian Hay Davison, who was senior partner of Deloitte Haskins & Sells in London back in 1987, to do an investigation into what went wrong, because the London and the New York markets survived, they kept going. Hong Kong was not as fortunate, it had to close for 3 days. So Davison looked into those issues, and his report recommended 5 points that we need to be aware of, and there they are in the middle of page 2. Fundamental revision of stock exchange and its management, extension of the settlement period to 3 days. Now, that actually didn't occur. It remains at 2 days. Development of a central clearing system, which we have, a review of the Hong Kong Futures Exchange, and development of an independent statutory regulatory body to ensure market integrity, investor protection. And that regulatory body came into being in 1989 and is the Securities and Futures Commission, the SFC, and that is the main regulator for the securities and futures industry. With regard to all the changes in securities markets around the world, a number of the institutions were merged in 2000 in Hong Kong, and we had a new holding company, the Hong Kong Exchange and Clearing Limited, which is known as the Exchange Controller, and it is a listed company of the stock exchange. So we will look into the different exchanges and their administration in a lot more detail later in paper 8. Now, the equity market in Hong Kong, 5th largest in December 2018, and there we list all the different exchanges and their domestic market cap. Okay. Growth enterprise market, we now refer to that as GEM, and that was developed to accommodate small and mid-sized companies. So we have got 2 boards in Hong Kong. Stock Exchange Main Board, and that's for larger, more established companies if you wish to list. And the Growth Enterprise Market, GEM, as I say, was developed for small and mid-sized companies. Now, the securities traded on the Stock Exchange Hong Kong, we've listed them there, ordinary preference shares, warrants, etc. be aware of them. Now, what about the debt market? Well, Hong Kong doesn't have as developed a debt market as other centres. And that is because the Hong Kong government has run a healthy budget surplus for many, many years, and so has not had to go and borrow from the markets. However, there has been some growth, and that can be attributed to the issue of exchange fund bills and notes. And those were introduced in 1990. And I'm looking at the third bullet point under debt market. Be aware, as with the US, bills are short-term, up to 1 year maturities. Notes are beyond 1 year, as are bonds when we get there. We've had other developments in the debt market where the Hong Kong Mortgage Corporation has issued bonds, as has the Mass Transit Railway, MTR, and the Hong Kong Airport Authority. Now, Hong Kong has developed into a major offshore debt market for China with a renminbi clearing system. And we allow institutions to issue renminbi debt in Hong Kong. Those are known as dim sum bonds. And the Hong Kong Exchange and Clearing has also introduced northbound trading of Bond Connect, and that allows investors to buy bonds in the China interbank bond market. Derivatives market, the Hong Kong Futures Exchange, that was established way back in 1976, and we discussed derivatives briefly in topic 4. Okay, let's move on and look at the Stock Exchange of Hong Kong. And we've listed some major features there in 2.1. Am I going to be examined on major features of the Hong Kong market? Unlikely. I would suggest that is given just by way of background, as is the different market sectors in the Hong Kong stock market. What is definitely examined is the stock exchange material with regard to mainland China. So I'm going to focus on this for a moment under paragraph 2.3. Now, China has been keen to encourage foreign investment into its markets, and that has occurred. I mean, that has happened. And they have their own rules and regulations with regard to regulatory practices and accounting. And the reason for those is to ensure market integrity and transparency. They want to develop confidence in the China market so that overseas investors will invest. As it says that China joined the World Trade Organization in 2001. That certainly had a major impact. Now, for many years and currently, 2 stock exchanges in China, Shanghai and Shenzhen. Now, it's worth just going through these points because, as I say, they're highly examinable. Shanghai Stock Exchange, established November 1990, first stock exchange in China. We have A shares and we have B shares. A shares are purchased by local Chinese investors and they are settled in the local currency renminbi. B shares, on the other hand, are open to individual and institutional foreign investors, and they are settled in US dollars. So B shares in Shanghai settled in US dollars. Now, as it happens, local Chinese investors can invest in B shares with foreign currency deposit. That has been a development. Okay. All right. And we're told right at the bottom there, page 4, Shanghai Hong Kong Stock Connect was launched on 17th November 2014. And we'll get into the Stock Connects, there's both Shanghai and Shenzhen, in a lot more detail in topic 5. Okay, one more development. More recently, Shanghai Exchange launched Science and Technology Innovation Board. They refer to that as the STAR market, and it focuses on high-tech and strategically emerging sectors. Okay, that's Shanghai. What about Shenzhen? The Shenzhen Stock Exchange, that was established in December 1990. A shares, renminbi, B shares, Hong Kong dollars. Right, so there's something that they like to examine. Shanghai and Shenzhen, the A shares for local investors are settled in renminbi. B shares for foreign investors are settled in US dollars in Shanghai, Hong Kong dollars in Shenzhen. Please be aware of that. And the Shenzhen Hong Kong Stock Connect, that was launched August 2016. Again, we're going to come across that in topic 5. Section 3, the global securities market, more specifically, US, European, and Asian markets. Now, the US market is a major market with regard to the US. Why? Because of the Hong Kong dollar peg. So the second point there, due to the Hong Kong dollar peg, it's pegged or linked to the US currency. Any change in US dollar interest rates or exchange rates automatically affects the Hong Kong market. Also, movements in the US stock market can be mirrored on the Hong Kong stock market the following day. So there is a strong link between the two markets. And we're reminded there that the best known stock market indices in the US, Dow Jones Industrial Average, the Dow Jones, S&P 500, and the NASDAQ. Moving on to 3.2 and European markets. Well, development of the European Union's single currency some time ago now has lowered transaction costs with regard to capital transactions within Europe. We list there the key markets. London is the largest stock market in Europe. Financial Times Stock Exchange FTSE 100 index that tracks performance. And we have the DAX tracking the performance of the German market. And the third one that we're highlighting, Asian markets. Well, Japan is the major economic power in Asia. Well, some would argue not for long, but it has currently 3,657 listed domestic companies. The index that they look at, the Nikkei stock average 225. And then we're reminded there that the other key Asian markets, Singapore, Korea, Malaysia, and Taiwan, and obviously Hong Kong itself,